Let's dive into the global economy, a vast and intricate system that connects every corner of the planet. Whether you realize it or not, the choices made in distant boardrooms, the rise and fall of currencies, and the shifting tides of international trade all have a way of reaching into your daily life. From the price of your morning coffee to the security of your job, the global economy is the invisible force shaping our world. You might think economics is just for experts in suits, but the truth is, it's woven into the fabric of our everyday experiences. When you see families enjoying a day at the park, or crowds bustling through city streets, remember, each of those people is affected by the economic roller coaster in ways both big and small. Imagine the global economy as a massive, slightly unstable roller coaster, one with unexpected twists, sudden drops, and the occasional loop-the-loop that leaves everyone gripping their seats. Sometimes the ride is exhilarating with booming markets and new opportunities. Other times it's nerve-wracking, as uncertainty and risk make even the bravest investors sweat. Right now, we find ourselves at a critical moment. We've been on a big climb, fueled by years of growth and innovation, but now the cart is shuddering at the peak. The stock market is jittery, with tech stocks nosediving and investors bracing for what comes next. It's a moment of suspense, where every headline can send shockwaves through the system, and it's not just numbers on a screen. From protests outside corporate headquarters, to high-stakes peace talks in international conference centers, the world's political and social tensions are rattling entire industries. Every decision, every negotiation, has the potential to tip the balance and send the roller coaster careening in a new direction. In the next few minutes, we'll break down these stories into digestible pieces. We'll look at how global events filter down to the local level, shaping the choices you make every day, whether you're sipping coffee at a cafe, commuting to work, or planning your next big purchase. For example, we'll explore why a company in California, perhaps one you've never even heard of, can make the entire stock market sweat. The tech sector, once the darling of investors, is now facing new challenges, and the ripple effects are being felt far beyond Silicon Valley. Meanwhile, whispers of peace in distant regions can send shockwaves through the defense industry. When the prospect of peace emerges, weapons manufacturers and their employees start to wonder what the future holds. It's a reminder that even the hope for stability can unsettle established industries. And don't forget the global domino effect. A political stumble in Tokyo can ripple through the bond market in London, sending analysts scrambling and investors rethinking their strategies. These international connections mean that no country is truly isolated from the rest. The impact can be surprisingly close to home. A shift in global interest rates or a sudden change in investor confidence can affect your mortgage rate in Ohio, the price of groceries at your local store, or even the stability of your job. It's all connected in a messy, chaotic, and fascinating way. The world's economies are like a web of highways with goods, services, and ideas zipping back and forth at lightning speed. Sometimes there are traffic jams, sometimes there are accidents, but the flow never really stops. So grab a beverage, settle in, and let's make sense of the economic mayhem shaping our world. Whether you're a seasoned investor or just curious about why things cost what they do, there's something here for everyone. Don't worry, I'll keep the jargon to a minimum. Mostly. By the end, you'll see that the world's wobbly economic roller coaster isn't just a wild ride for the experts, it's a journey we're all on together. The tech world has been on a tear, fueled by AI. Investors threw money at anything AI-related, sending tech stocks soaring. But now the music has stopped, and the tech sector is stumbling. The AI boom isn't over, but the initial frenzy is cooling. Investors are asking tougher questions about profitability. The easy money phase appears to be over, and the market is feeling the tremors. To truly grasp the scale of the current artificial intelligence frenzy, you need to look at one company, NVIDIA. In the world of technology, few names have become as synonymous with innovation and disruption as NVIDIA has in recent years. Once a niche player, NVIDIA has now become the heartbeat of the AI revolution, and its influence stretches far beyond Silicon Valley. The company was once best known for making graphics cards that powered the dreams of gamers everywhere. But today, NVIDIA's chips are the essential hardware behind the world's most advanced AI systems, from self-driving cars to language models and data centers. Their technology is now woven into the fabric of our digital lives, enabling breakthroughs in science, medicine, and entertainment. NVIDIA's rise has been nothing short of meteoric. In just a few years, the company has shattered records, recently surpassing a staggering $4 trillion market cap. This explosive growth has made Nvidia one of the most valuable companies on the planet, and its stock is now a bellwether for the entire tech sector. Investors, analysts, and even rival tech giants now watch Nvidia's every move. The company's success is seen as a barometer for the health and direction of the entire technology industry. When Nvidia thrives, optimism surges across the market. When it stumbles, uncertainty ripples through boardrooms and trading floors worldwide. Right now, the market is holding its breath, waiting for Nvidia's next earnings report. The anticipation is palpable, with investors and tech enthusiasts alike eager to see if the company can continue its record-breaking streak. The outcome could set the tone for the entire industry in the months ahead. Any hint of a slowdown, any sign that Nvidia's momentum is faltering, could send shockwaves through global markets. Billions of dollars are at stake, and the ripple effects could be felt from Wall Street to Shanghai. But there's more to Nvidia's story than just numbers. The company's close relationship with the US government adds a layer of geopolitical drama. As nations race to dominate the future of AI, Nvidia's chips have become a strategic asset, drawing attention from policymakers and security agencies around the world. In many ways, the fate of the world economy now rests on Nvidia's next announcement. The company's performance will influence not just investors, but governments, industries, and millions of workers across the globe. This is about more than just profits. It's about the future of technology, the resilience of global supply chains, and the balance of power in a rapidly changing world. No pressure, Nvidia. The world is watching closely. Here's a story illustrating the stock market's bizarre logic. Defense companies were a safe bet amid global conflicts. But whispers of peace caused defense stocks to dip. The market was pricing in a peace dividend. European defense firms also felt the chill. It's a stark illustration of the market's inverted moral compass. Analysts caution against assuming peace is imminent. The market's reaction shows how defense spending is tied to active conflicts. The moment the temperature lowered, investors started looking for the exit. It's a powerful story of how financial markets operate. Sometimes good news for humanity is bad news for business. Despite peace talks, defense spending isn't disappearing. The conflict was a wake-up call for European nations. They're rethinking their defense posture for the 21st century. This involves long-term contracts for advanced military equipment. The geopolitical reality supports sustained demand for defense. The recent dip might be a brief correction, not a long-term trend. Let's talk about bonds, the backbone of the global market for lending and borrowing money. Bonds might sound like something only investors or governments care about, but in reality, they touch every part of our daily lives, whether we realize it or not. When you hear about the bond market in the news, it's not just financial jargon. It's a story about how money moves through our world, shaping everything from the cost of your home to the taxes you pay. Right now, bond yields are rising. That means the cost of borrowing money is going up, not just for big corporations or governments, but for everyday people too. When yields rise, banks and lenders have to pay more to borrow money, and they pass those costs on to you. This shift affects everything from the interest rate on your mortgage, to the amount you pay on your car loan, to the taxes your local government collects. If you're thinking about buying a house, higher bond yields mean higher monthly payments. If you're a business owner, it means loans to expand or hire new workers become more expensive. Governments are also feeling the pinch. As they borrow more to fund public projects or cover deficits, they have to offer higher yields to attract investors. This pushes borrowing costs up even further, creating a cycle that can be hard to break. At the same time, inflation is running high. That means the money you have doesn't go as far as it used to, and lenders want higher returns to make up for the loss in purchasing power. This demand for higher returns drives yields up even more. Why does this matter to you? Because higher borrowing costs ripple through the entire economy. They can slow down growth, make it harder for families to buy homes, and put pressure on businesses to cut back or raise prices. Government bond rates are more than just numbers. They're the benchmark for almost every loan in the economy. When they go up, so does the cost of everything else that relies on borrowed money. For families, this means mortgages and personal loans become more expensive. For students, it can mean higher rates on education loans. For anyone with a credit card, it can mean bigger monthly payments. And for society as a whole, more of our tax dollars go toward paying interest on government debt. leaving less money for schools, hospitals, and other vital public services. In a way, the bond market's tantrum is a bill we all end up paying, whether we see it directly or not. It can lead to higher prices, fewer jobs, and less investment in our communities. But here's the good news: understanding these forces gives you power. When you know how the bond market works, you can make smarter choices about your own finances, from when to lock in a mortgage rate to how you invest your savings. It helps you see the bigger picture behind the headlines, so you're not caught off guard by changes in the economy or sudden shifts in interest rates. By staying informed, you can make decisions that protect your future and help you thrive, no matter what the markets are doing. Let's visit Japan, known for political stability. Prime Minister Shigeru Ishiba is in trouble after election losses. He's clinging to power, creating uncertainty. Investors fear he might abandon fiscal discipline. Japan's bond yields are rising amid political drama. The Bank of Japan faces pressure to raise rates. A fact-finding report on the election loss is due soon. Its outcome could calm or further spook markets. The resolution will have major implications for the global economy. In Senegal, a new government uncovered hidden debt. The previous government hid $11.3 billion in debt. The IMF is now sorting out this financial mess. It's embarrassing for the IMF, which had a monitoring program. The IMF must balance accountability with encouraging transparency. Investors hope for a misreporting waiver to help Senegal recover. Without it, Senegal might face economic catastrophe. This story highlights the importance of trust in finance. Hidden risks can have significant consequences. Transparency is crucial for a stable financial system. We've toured our jittery global economy, from tech reality checks to peace talks affecting defense. Political struggles in Japan impact debt, and Senegal's debt scandal challenges financial watchdogs. These stories are interconnected threads in a global tapestry. The era of cheap money is over, replaced by higher costs and tension. Global shifts affect your mortgage, savings, and shopping costs. We're all on this economic roller coaster. Understanding these forces empowers you. It helps you navigate uncertainty with clarity, and that's a valuable return.